Traders, welcome to the launch webinar for the all-new Thrust Breakout Algo from Arc AI. You'll notice my voice sounds a little different. That's because it's not Sean. This is Jim with Arc AI and NeuroStreet and head of sales and head of education here for the companies, and thrilled to be with you. Sean sends his love on a loving day. He can't be with us today because he is on the road. And so he encountered some difficulties. He's totally fine, by the way, but encountered some difficulties that impacted his schedule, so he couldn't be here to launch this with you. So you're stuck with me. So so here we go. So I'm going to go ahead and jump in and try to fill his shoes as best as I can. A couple groundkeeping rules before we get started. Of course, if you have questions, feel free to type them in, though I can't promise you that I'm going to get to them during the webinar. So if for some reason I don't get to your question during the webinar, do me a favor and just catch me at the end, okay? Because I don't want to leave you hanging, but I'm in the middle of presentation mode and might miss something, okay? So just so you are aware, so keep me posted, okay? We are recording the event, so we will certainly get the recording out to everyone in case you miss it, or in case you want to go back and watch something. We got you covered, okay? So those of you that are watching the recording, hello to you as well. So we're looking at the all-new Thrust Breakout algo. So where did this algo come from? Oftentimes it might seem like, oh my gosh, another algo, another thing, another this. And the reason is, first off, we're a development company. That's what we do. But second of all, these are trading strategies that we have found as to have a significant edge in the market. Something that is going to provide our traders with what we would call alpha, or really solid trading opportunities. And we take these concepts and then we completely automate them so that traders can take these algos and run with them. That's the idea. So where did this trade come from? Well, this is something that first off stems from supply and demand, which kind of runs the markets, right? Supply and demand is the backbone of the way that the markets move. And so it's based on supply and demand concepts, but not only based on tried and true concepts. We've literally traded over 500 trades on this exact setup, and it's got a 75% win rate. So we're going to be looking at that throughout this event. So that's where this algo came from, was the idea that we have traded this very, very, very successfully for over a year. Why wouldn't we automate it, right? Why wouldn't our traders want to trade that? That's incredible. So that's what we're going to be looking at today. So personally, I think that this is a really great opportunity and something that our traders are going to do very, very well with. So we can't wait to see what you come up with and how it works out for you. But before we dive in, of course, we are talking hypotheticals and performance and everything that goes into that. So we do need to post our disclaimer. We can't guarantee results. I would love to be able to. Welcome to trading. This is how it goes, right? You all know the gig. We can't guarantee results. We're not your advisor. We can't tell you what to trade, when to trade, how to trade, how much to trade. That is entirely up to you. You are responsible for your own risk assessment of your accounts and your trades. Entirely up to you. Okay. Give me a yes in the chat box if you guys are good with this, and then we can go ahead and move into the presentation. Take some time to take a look. And if you're all good, type a yes in the chat box and we'll move forward. Good deal. All right, let's do this. So first off, what is it that traders want in general? Well, we want to win. We want to make money. We want to make more money. We want to do it in less time. We want less emotional involvement, less missed trades, better accuracy. But it all starts with and continues on the basis of one thing, and that is to make money trading. That's why we do what we do. It's why we automate things, why we find strategies, why we look for an edge, why we buy stuff that can help us as traders. It's because we want to make money as traders. That's what it all comes back to. So a lot of our traders, I would love to have zero losers. A lot of our traders are trading for prop firms, right? How many of you here are in an evaluation right now? Type eval in the chat box. How many of you are funded traders? right now. Type a fund in the chat box. Maybe you're trading your own money. You could type in own in the chat box, right? A little bit of both, some of both. Yep. Yeah, a lot of traders looking to trade for prop firms. And specifically when it comes to algo trading, being able to trade an algo with a prop firm is something that is very enticing. To be able to have something that eliminates our own obstruction and emotions and everything, interference and making mistakes and missing trades and all that kind of stuff. And to be able to do that on a prop firm account, that's what a lot of our traders are looking for, because it's a great opportunity, right? So when we look at the problems with trading on our own versus automation versus, there's some advantages involved with being able to automate. There's some difficulties and challenges that every trader faces at one point or another, and sometimes at every point or another, right? Things like emotional interference, and we talked about missed trades, and hard to find a good trading plan. And then you get into the situation where you find what you think is a great trading plan, and so you visually back test, you go through the charts, you mark it up, and you think you've got the greatest thing ever, and oh boy, you're going to make a ton of money next week in the trading markets. And you go to trade it the next week, and it doesn't quite work out the way that you thought it would, right? How many of you experienced that before? You think you've got the greatest thing in the world, you go to trade it, and no, not so good, right? So what are the advantages of being able to automate? Well, first off, everything in terms of back testing, you can do it a lot quicker. You can back test more data more quickly. You don't have any sort of subjectivity to it. It's either going to work or it isn't. And so there's a huge advantage to being systematic and mechanical with your entries, and to be able to minimize the emotion, and more importantly, increase speed, better accuracy, less missing out on trades, right? So when we talk about algos, and give you a little backstory on who we are a team of traders and developers. We are not developers who just develop. We are a team of developers who trade the markets, and we're traders that develop. So it's not just here's this shiny object, but these are actually coded based on, again, a real edge to the market. And we found, well, we can find the best industry expert coders out there, and they do a phenomenal job of making this stuff come to life. Personally, I don't know how they do it. As I mentioned, I'm on the front end in education and all of that, and I don't deal with development, so I don't know how they do it. But to me, they do it, and it's magical. And I go, wow, that's incredible. Glad you're here, right? So, but the algos are built by industry experts. They're built for trading. They're built for the idea of making it something that you can optimize based on your trading. Now, at the end of this webinar and during the AMA tomorrow, we're going to give you winning templates. They're really good. Some of you are going to love those winning templates. You're going to trade them. You're going to love them. You're going to knock them dead. Other traders might see those templates and go, it's not quite, I want to change some things. I want it to do this. I want to change based on your own preferences. Maybe you're in Australia and you don't trade the US market hours. Maybe you're in Asia or wherever. Maybe you want to trade different instruments, different times. Maybe you don't even want to trade futures. Maybe you want to trade stocks. Maybe you want to trade Forex. Great. You can take this algo and make it whatever you want it to do, aside from rewriting the actual way that it trades, which we're going to look at, obviously. But in terms of your risk reward, in terms of your metrics, in terms of your back testing, and in terms of how much you want to risk per trade per day, you want filters and high watermarks, a risk reward and money management. You can optimize all of that. So what we have here is something that is a great strategy that has been proven to be effective. And now we've given you the opportunity to be able to back test it according to your standards. And we're going to dive into how it works and start to unravel some of those things that you can do with it, because it's pretty great. So first, how many of you here have traded supply and demand trading before? Supply and demand zones, you've studied it. Give me a yes in the chat box if you've studied this stuff. Yeah, see a lot of yeses coming in, right? So when you learn about supply and demand trading, my fave, you're going to love this. We learn about supply and demand trading. It's I'm not going to get deep into it, but it comes down to balance versus imbalance in the markets. It's supply and demand. It's who's leading and the tipping the scales. Is it more supply than demand or vice versa? And that's what moves the market. And so when we study supply and demand, that's what we learn. And we identify these patterns. You've probably heard of them before: rally, base, rally, base, drop, drop, base, rally, so on and so on. So what does that actually mean? Well, let's look at the patterns here for a second. And we'll go more into this into a demo here in a bit, but I want to take a look at, let me grab a draw tool here. So what we have here is, let me move this out of the way. Good to go. Okay. So we've got a large candle here, bigger than the other ones. Yeah. Okay. And then we've got a small candle, and we've got another small candle, and we got a breakout. Okay. That's demand. What we have here is markets moving up because there was high demand, more demand than supply. Supply steps in, they start trading, and then they run out of supply. So what happens? Demand is still strong, causes the market to go up. When we talk about supply and demand trading, first off, there's some difficulties that come with trying to trade this stuff. The first is, well, is that a rally candle? Well, what about that one? Is that a rally candle? Is that one a rally candle? Is that a drop candle? What about that one? Well, is this one? Well, I don't know. How do you know? Are you going to sit there and measure every candle on every time you're trading? No. And so what happens is there's some room for misinterpretation. Some signals might be stronger than others. And when you back test, clearly you look at it and go, oh, yeah, I would trade this one. Oh, yeah, I would totally trade that one because that was a winner. And then you don't trade the loser. And then when you go to real trading, it's totally different because there's some subjectivity there. And that's part of the challenge. So how do we find the rally and the drop candles? How do we identify what's a base candle? How do we know where and when to trade the zones? Well, do you just draw a box around the zone and go, okay, I'm going to trade that? Well, when do you trade it? How do you trade it? Does your stop go here, or do you trade it halfway through? Do you put a volume profile in here and say, I'm going to trade the high volume? Clearly, there's some challenges there. But it all comes down to this, is once that zone is formed, reality is you're late to the party. And what do you mean I'm late to the party? Well, the market's already moved, hasn't it? The market came up here, went sideways, and then it broke. So who's the better trader? Now it's up for debate, sure, but do you get in on the breakout and trade before everybody else? Or do you wait for it to pull back, come in, and you can put the stop here? And what if they're going to just run right through it? You don't know that. So while other supply and demand traders are waiting for the market to come back and then hoping they get the response they're looking for, this algo and this strategy will have already taken the trade, entered, gotten profit, and the trade's actually down here. There's the break, there's the profit. And so if you're looking at this zone down here, well, what are you going to do? Wait for them to come all the way back down here to trade it? No, we've already taken the money. We're already moving on to the next trade. So no more being late to the party. You can get in. The system is going to identify where that demand or supply is in the market, and it's going to trade it as it's moving. As the demand is exceeding the supply, that's when it's getting into the market, because that's going to get you in at the right spot. So where do you get in, right? So good question. So you have a couple options with that. You can tell the algo, I want to give myself a buffer above that zone, however many ticks you want to do. We're going to look at that more in the AMA tomorrow. Okay, so we'll show you how you can take a look at where you want to get in and how. Okay. But so the problems are solved. We've got supply and demand. You're trading it before everybody else. By the time the supply and demand traders are entering, you're already got your money on the table. Automatic zone formation and breakout entries. Auto-adapting money management. No more having to figure out if it's a rally candle or a base candle. The algo is going to do all that for you, and then it's going to actually enter the trade for you. Okay. Can you trade it on swing trading? Yes. Can you trade it for scalps? Yes. Day trading, of course. No more complicated systems. Okay, so it's going to be easy automation. Good stuff. So here's another example of how it works. So you've got rally candle, base candle, rally, There's the breakout, took the trade, got some money. Drop, base, breakout in the money. Okay, good stuff. Let's look at another example of the trades and how they work. So we've got the long setup here. Extended range candle. What does that mean? It's a big candle. It's a big candle. What else does it mean? It means that the body of the candle, I'm not going to go deep into this today. Again, we can do this in the AMA tomorrow. But if we look at the total range of that candle, the range of this candle needs to be at least 50% body. This is kind of the standard terms. By the way, you can optimize that. If you want it to be less, more, it's up to you. The algo will backtest and let you trade based on what you see fit. Okay. We're going to go over some hints in optimization tomorrow. So you're going to absolutely want to get in on that action because trust me, I've got some really great stuff to show you in terms of setting up this algo to do what you want it to do. Okay. So good stuff coming your way tomorrow. But this is telling you that not only is it a larger than average candle, but it's also mostly one directional because it's mostly body. The wicks are pretty small. Okay, so that's the extended range candle, what we would call a rally or a drop. Then we have a couple narrow range candles. And what does that mean? Smaller candles, yeah, but more importantly, they're mostly wick. Okay, in this case, extended range, mostly body. Narrow range, mostly wick. Simple. Okay. Then we get the breakout. Where does the breakout go? It typically goes above the high. You can set it right at the high. You can set it above the high. You can optimize that too. We're going to show you how to do that. So in this case, it's trading just above that break. There's the entry. There's the target. Okay. The short, just the opposite. Extended range candle, large directional candle, right? Smaller candle, very little body, big body. And then you get the breakout. May trade a short. There it is. Entry just below the zone. And then there's the target. Cool. So how do we know it works? How do we know it works? So as I mentioned, we've traded this exact setup. Not just a handful of times, not even just 100 times. We've traded 580 trades on this setup. And it's got a 76% average win rate across those trades from the trades that we've logged. That's a lot. That's a lot of trading to confirm that it works. Okay. What about futures trading? Yeah, we're trading it there too. 22 trades. We're just getting warmed up. 22 trades at a 68%. Also solid. Okay. So solid trading. So here it is. Rally candle, base candle, trade the breakout. There's the target. It works because we've proven it works because we've traded it for a very long time. Of course, we have optimized settings ready to go for you. Okay. Green up and to the right, everything you want to see in terms of an algo. Okay. We got that covered. This one's trading at a 1-to-1 risk reward. The beauty of it is you can optimize that too. Okay. We've got a couple different markets ready to go, a couple on ES, one on MNQ. We're going to look at some more markets tomorrow in terms of optimization as well. Okay. So Rick's asking a great question. Back testing or forward testing? Okay. Both. Okay. So here's your back test. Here's your back test. Optimized settings. Here's your forward test. This is real trading. Okay. This is the setup. This is the exact setup. So that's how we know it works. That's why we coded it. Okay. Good to go. So what's the edge here? What's the edge that this algo has that no other algo can do, that no other system can do, and that you can't do on your own entirely manually? It's full automation on supply and demand trading, but not only that, you're trading a breakout before everybody else is even before anybody else is even showing up to the race, you've already won. Okay. So trade before the herd. Trading proven supply and demand strategies, again, 75% win rate plus across 500 plus trades. And oh, by the way, here's the current stats. Okay, so there's the demand zone breakout is what it's called. 583 trades, 76% win rate. Okay. It's a real deal, real numbers, real trades. Okay. Selective algo templates, and we'll show you how to make more templates. Maybe you don't want to trade MNQ. Maybe you want to trade the Russell or something else. Cool. We'll show you how to do it. What about, we talked about prop trading. We know a lot of traders are trading prop firms here. So if this is the trade, drop, base, entry here, breakout, and down. If that's the trade, well, what if this trade is 20 ticks and the next trade is 40 ticks? Do you really want that much variance in how you're trading? Do you really want to be taking double position sizing on your next trade? No, not if you're trading for a prop firm. You don't. So do you just not take these trades that are 40 ticks? No, we've got you covered there too. The system will automatically size your positions for you. So if this is 20 ticks and you're normally going to trade 10 contracts, then when this gets to 40, it's going to automatically size that to 5 contracts for you to lock in your risk. It's going to lock in your risk on every trade. So as a prop trader, that's huge because now you know you can set with a win rate. Let's say it's 75%, right? You got your win rate. Let's say you're trading 1-to-1s, risk reward. And you know, okay, based on this, I can now set my max risk per trade. Risk per trade is going to be something that you can really dial in. And you know you've got a significant edge to help you get through your eval, get funded, stay funded, make money, scale the account, repeat, so on. Okay. So good stuff. Not just for algo traders. Maybe you've never traded an algo before in your life. How many of you here have traded an algo? How many of you have never traded an algo? Feel free to chime in. But it's not just for algo traders. You can trade this, say you don't want to have it completely automated. You want to be able to tell it when to go and when not to, okay? All you have to do is say go long, go short, enable the algo. It's going to take the trade if the setup is available, if the setup comes in. So you can now be the puppeteer, okay, controlling what the algo is going to do. It's great for semi-auto trading as well. You don't have to just trade it fully automated. Of course, most our traders will, right? But the opportunities are endless. You're not locked into a black box. You don't have to just put it on the chart and let it run if you don't want to, okay? And not only that, if you want to change things up, you don't have to just accept just those settings. You can modify them as you see fit, okay? So let's do a quick demo. I've filmed a video here to make it easier. What's gap trading? Global assets trading. Global assets trading. As I mentioned, we are trading this strategy in the Global Assets Prop program, which is a manual trading program. Yeah, so that's what that is, Global Assets Prop program. Okay. Cool. So let's watch this video. I'm going to share my sound here, and I'm going to mute my mic. And let me know if you can't hear it. Be sure to chime in on the chat box and let me know. And I'm going to go ahead and play this video, and let's check it out and see what this thing can do. Here we go. Hey traders, Jim Simmons here with Neuro Street Trading Academy, here to do a quick demonstration on the all-new Thrust Breakout Algo. Again, this is a supply and demand automated breakout trading algo. Really a great tool. We're going to dive right in here. Let's get started. So first off, what does it do? The first thing that it does is it identifies supply and demand zones. And here's a perfect example of a demand zone. This is a rally candle into a base candle into another rally candle. Now, the way that most traders are trading this zone is they're going to wait until the market comes back into this zone. If I grab a risk reward tool, we'll just kind of highlight that out. And that's typically how a supply and demand trader is going to trade that zone. The beauty of this tool is that it's actually going to enter you on the breakout itself. So if we look at the same trade, and let's say we give ourselves a couple ticks above that level, a couple ticks below, by time the supply and demand traders are trading that zone, you've already taken profit and you're on to the next trade, looking at a whole different market. So really a great algo. It's going to identify those patterns on the chart, and it's going to enter the breakout of that pattern as that becomes available. Another example would be right here on MNQ. If we just grab a rectangle and draw a zone around the rally base rally, there's the example again here of a great breakout opportunity going long right here with structure coming out of a low. We've got a breakout here. Most traders again are trading here, and there's nothing wrong with that except for the fact that we've already made money on the trade. We're already moving on. So that's what the algo does. Let's see it in action. I'm just going to go ahead and fire off some trades, let this run through, and take a look and see what it can do. So here we go. Let's dive in. Okay, so we can see we've entered our first trade right here going short. And let's look at the pattern. Let's identify what the algo is seeing here. We've got a drop into a base candle, into another drop candle. So what's a drop candle? It's an extended range candle. It's a big candle. That's the best way to put it. Simply, it's a big candle. It sticks out like a sore thumb. Then we have an inside bar, and it doesn't have to be an inside bar, but what we do need to see is that this candle's more wick than body. Okay, the body is less than half of the candle's range. That's a basing bar. As soon as we get the breakout, depending on how many ticks we're telling the system to, get on the other side of that as a breakout. Obviously, we may not want to trade, one tick below. You might want to give it some room to make sure they're not sweeping liquidity and that sort of thing. And it'll enter the trade automatically. You can see it's got our stops put in here for us, our targets put in, everything's good to go. And the beauty of it is you can set how far beyond this zone you want your stop to go. Now I believe I've got it set to 25% beyond this range, and then we can do risk reward multiples on the target. And of course we have auto sizing positions based on your risk preferences. So if you tell the system how much to trade as risk on each trade, it's going to set the number of contracts for you, which is really great. So let's go ahead and see how this trade plays out. Okay, so we hit profit on that first trade. Let's see if we can catch some more trades. So we just got another trade on MCL going short. If we look at the pattern here, there's our drop into our two base candles. You can have more than one. And then there's the breakout as it came through. Going to the downside. Let's see how this plays out. Okay, there's our next winning trade. And you can see how easy it is. Just let the algo do its thing. Let it enter the trades. We're trading it on a basket of different markets here, MES, MNQ, MCL, 3-minute charts. Let's see if we get some more trades. Okay, we're going short here on MES. We've got drop, base. Looks like another drop candle into a couple base candles. And you can tell, looking at these candles, it's hard to identify whether this is a drop candle or not. The system's programmed to identify exactly how big the candle needs to be. You can set preference based on how big you want the body of the candle to be versus how big you want the wicks to be versus how big you want the extended range candle to be based on ATR, which is, again, just brilliant. What they've been able to do with this algo here. It's great. So it looks like this is on its way. Let's see how it goes. Okay, 3 for 3 on the day. Let's see if we can catch any other trades. And you notice here too, all of these trades are right around $500. The algo is setting that that risk according to our preference, and I'm just using a 1-to-1 risk reward, which is why those are coming in right at about 500, which is perfect. Okay, now the algo has gotten long on MES. Now we can see momentum hasn't quite shifted yet, but we did get a break in structure based on these zigzags. And we also broke above this pivot here, and the algo has identified this as long conditions. It's automatically set our size on the number of contracts here and enter the position. Let's see how this one goes. Okay, now in normal trading, most traders at this point are probably going to move stop to break even because this has gotten pretty close to the target. If it's going to go, take the money. If it's not, just bail on the trade. So we can move these stops and targets in as we're trading as well. Okay, that one ended up working out, gave us target. Let's see what else we can get. Okay, we've gotten long here on NQ. There's our rally base. Let's see how this one works out. Now again, looking at this, you may, choose to move to break even on something like that. Got pretty close to the target, we can see there. Now in this case, rather than modify things on this order, I'm just going to let the algo do its thing. I'm just going to let it run. And win or lose, we'll accept it as it is. Okay, that one worked out fine. Let's see if we've got anything else. Okay, we got another long on MES. So we got pretty close to the stop. Never did quite make it to the stop. Let's see how it does from here. Okay, that one was a stop out. Take it as it is. Still got money on the table for each market here, so that is fine. Let's see if there's any other last minute trades that come through. Okay, so that is the end of the day. Let's see, how did we do? We'll take a look at the performance here. Okay, so here is our performance. Here's how we ended up. We ended up with about 2,000 net profit, risking about 500 per trade. Largest winning trade, apparently this had broken all of the contracts up separately, so these numbers got kind of a little bit jumbled. It's definitely not 97% profitable for the day, so I don't want to mislead you there. The most important thing that matters here is the profit factor, which is 5-point profit factor is great. Realistically looking at these, we had 2 net wins here, 1 net winner here, and 1 net winner here. So I think this one would have been, 2 out of 3. If I remember right, we had 1 win there, stop out there, another win there. So yeah, 2 out of 3. And then we had 2 wins and 1 win. So, when you combine it all together, and those of you I'm a fan of trading a basket of different markets. That way you don't have a one-trick pony. You can have it trade on multiple markets, and every day can be a good day. So, looking at it here, obviously not 73 trades, but good profit factor, good money on the table. So that is a quick overview of how the algo works. Again, finding the patterns for you and trading them, rally, base, breakout. There's the trade. It really is that simple. So we'll see you in the AMA. We'll see you on the charts. Traders, have a fantastic day. Cheers. There you go. Pretty sweet, right? Pretty sweet to have it, showing on multiple markets, trading multiple markets side by side. These were done on 3-minute candles. You can trade it on a 5-minute. You can trade it on a volume chart. Don't trade it on fixed range or Renkos or any of that kind of stuff, right? You want to stick with variable range candles. So volume, tick, minute candles, right? I do see a lot of questions coming through, which is great. I'm happy to answer those questions. I'm going to keep going, though, to make the most of everyone's time, and then stick around until the end, and I'm going to answer all the questions here. Okay. Okay, so we'll go through everything. Don't worry, we got you covered.
Hey traders, Jim Simmons here
I don't want to hear that guy again. Jeez. Okay. All right. So clearly, I just kind of go fast. I just kind of maybe that's my nature. I don't know. But here we are. So we have some exciting things to go over. One, we're going to go over what you can get your hands on this for, and then we'll take a look and go over details on pricing and all that. But first, what I want to do before we even go to the winners is I want to take a look at the settings, the templates. What are we going to give you as part of the algo? So first off, we've got a workspace available for you that you can just plug and play. You can put it on your charts, load it up, ready to go. Okay. So we've got a few templates here. Let's take a look at MNQ. We're going to start with MNQ here. So let's take a look at what we've got going on. I'm not going to go through all the settings and all that. Okay. That make the most of time. We're going to do that tomorrow in the AMA. So be sure to be there with us so you can cover that. But you could see a whole bunch of different parameters that you can set that are a lot easier to set than you might think. Okay. We'll give you some kind of standards. We'll give you some of the norms so that you don't end up like Frankensteining something that's just completely something you would never even recognize, right? So we're going to give you some ideas on what to optimize, how to optimize all that. Okay, so we got you covered. But here we go. So we've got 500 risk on the trade. We've got the range. So what this is doing is it's setting the stop loss based on ticks beyond the range. Okay, got a 1.3 risk reward trading from 8 to 230. And here's the numbers. So you've got 17,000 in profit from January, early January till now. And this is on MNQ. There's 63 trades at a 68% win rate. And this is at 1.3. Now, the beauty of it is like we said, you can set your risk reward metrics exactly how you want to set them. Okay. So 1.3 risk reward, it's great. 2.8 profit factor. 2.8 profit, very, very strong. Now, if we go to the analysis here, we can take a look at the equity curve. Looks great on the daily, looks fantastic. If we go into, each day, you can see a handful of, few losing days in there, right? It's going to happen. You're going to have losing days on some markets. And that's why, especially, I'm a proponent of trading multiple markets, because some days you might have one market that's down, but the other two are up and you still made money for the day. So just to give you an example, but yeah, there's some losing days in here, a lot of winning days though. And the winning days are pretty sizable, which is great too. 1,800 on that day. Fantastic. Let's go back here. And so if you're looking at this report, I want to kind of humor me here. I'm going to go back to the chat box here for a second. Humor me. So what is the most important thing on this list to you? If you look at this summary and you're looking at all the different criteria, profit and profit factor, drawdown, dates, percent profitable, what is the most important thing on this list to you as a trader? Okay, go ahead and type in the chat box because I want to see where everybody's at. This is really important. I really want to go through this to kind of, again, humor me, and I'll show you the point of this, right? And a lot of good answers coming through. Yeah. Great. Keep them coming. So let's go through. I'm going to read them out. I want to go through and give you an example of what traders are looking for. So we've got drawdown, 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 wins versus loss, profit factor, drawdown, 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 profit factor, props, sharp ratios, a little bit more advanced, drawdown, profit factor, drawdown, profit factor, drawdown, 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 percent profit, max drawdown, profit factor, consecutive winners and losers. That's a good one too. If you're a prop trader, drawdown. Okay. I think we see a bit of a theme here. Drawdown. The most important factors that traders that are trading prop firms are looking for are these two numbers. How much did I lose top to bottom off my high water mark? How much did I net in profit? Now, obviously, if our max drawdown's $1,000, but you made $1,000, well, that's probably not going to knock anybody's socks off. That's not going to get it done. We want to know as traders, can I use this to pass my prop firm, get funded, stay funded, scale my account, make money, repeat, quit my job, ride off into the sunset, build wealth? Hopefully in that order. Okay. So this is what traders are looking for. So a profit factor is great. It's a meaningful number, but to me, the most important things are these two numbers. Okay. So that's some of the things that we look to optimize is based on that, because we want traders passing prop firms and getting funded with these algos. And oh, by the way, it happens a lot. Okay. The last couple algos that we just released are getting lots of traders funded. So we do see that quite a bit. What about this one here? Let's take a look. ES. Okay, what does this one look like? 6,400 in profit, 3.58. We got 29 trades. But what's our drawdown? 800. So you're top to bottom off of your high water mark. Now this is trade by trade, not intra trade, but still. Max drawdown 800 versus 6,000 in profit. It's great. 75% winning trades. Does that matter? Well, this matters when you factor in what's your risk reward, which is 1.14 in this case. You know, what's your, how many trades and how many winners and losers, and what's your, the numbers that matter are profit, drawdown, and profit factor, which is 3.58. I just drew over the top of it and you can't see it. So let me erase it. There we go. 3.58. Great. Great. What does it look like? Well, it's probably going to look like up and to the right. There it goes. What about losing days? 3 losing days? Out of how many days? Solid. Very good. Very good numbers. Okay, let's go to ES. We've got another one. These are all, the ES is full size. The NQ is micro. Okay. You can use it on either one, whatever you prefer. 3150 profit. What's your max drawdown? 475. That's great. And you might look at it and say, well, that's not a lot of profit. Well, you got not a ton of trades, but these are the numbers that matter here. 475 versus 3150 in profit. And yeah, your largest loser is less than 500 bucks. So good deal. Yeah, and good question on how many contracts. It's going to be based on how you set the algo. You can set it to static contracts. And what you're going to see is you might have one trade that's 20 ticks, another is going to be 40, and this one might risk 200. This one's going to risk 400, right? Well, a lot of prop traders don't want to do that. They just want to say, I just want to lock in at 250 or whatever the case might be. And in that case, the algo is going to size your position for you. Okay, so it's going to tell this, the system's going to automatically set however many contracts you need to trade based on your risk, which is amazing. Really glad they were able to get that coded for us. It's really awesome to have it, especially for prop trading. So we've got 33 trades, 93% winning, 475, max drawdown, 3150. Let's go to the analysis. Looks great. Looks really good. Couple losing days and rest are looking good. Looks really good. So these settings, these templates are ready to go for you. And so we're going to give those to you. Okay, these settings are ready out of the box, ready to go for you. And this is for, you know, year to date, really. This is on 5-minute candles. I believe it's 5 minutes for each one here. Yeah. 5 minute, 5 minute, 5 minute. So what can you trade it on? Well, it works great on 5-minute bars. You can use it on 3-minute bars. You can use it on volume charts, whatever you want to use it on. See what works for you. We're going to give you the settings and you can take it and run from there if you like. Okay. 15 minutes? Yeah, absolutely. 15 minutes. Of course. Can you trade it on stocks? Yeah, I mean, we got 580 trades that show you can trade it on stocks. So yes, trade it on stocks. Trade it on the right stocks. That's a separate discussion, but what's the trading hours for the algo? Whatever you want it to be. That's whatever you want it to be. We had it set to 8 to 2:30. You want to do something else? Do something else. Cool. So we have a winner. We have a winner. Yeah, of course, Forex. Yes, absolutely. we'll go through some more questions here in a minute, but first I want to give a free algo away. So let's see if the free algo winner is here. Must be present to win. JK, you don't have to be present. But the person who won is in attendance currently. Who could it be? If your first name starts with a B, you're in good shape. And if it continues on with a Brian, you're in good shape. And if your last name is Walsh, then you won. So congratulations to Brian Walsh. You've won yourself a free algo. It's our gift to you. Thanks for being a part of our community. We always like to, on the launch, give away a freebie. And so, Brian, you are the winner. So everybody congratulate Brian. Woohoo, right place, right time. Now, I'm going to take a money-making tool and go make some money. So, good stuff. Good stuff. All right. So, we got a lot of questions here, but I want to go through pricing first. What do you get? What does it cost? 3 different markets: MNQ, MES, MCL. Okay. And I put together settings for each one of those markets. But in NinjaTrader, when you test those markets, it only gives you one at a time, right? Well, what if you want to look at it as a basket? Like, you're not going to just trade one, what if you want to trade all 3? But what if you want to look at the performance on all 3? Well, that's what this is. I took every trade, compiled it all together, put it all in this really super nerdy cheat sheet here. It's very nerdy, and I geek out on this stuff. So just, is what it is. This is how my brain works. Welcome to it. So what did it do across 3 different markets? So you got 3 different markets together. Okay. Total profit, 81.72. Well, we got to pay commissions. Okay. So 69.88 total profit. What was the max drawdown? Remember, we talked about max drawdown versus profit. 1,400 in max drawdown to make about 69.88 for what time frame? 1 month, not even. So in 1 month, you could have passed many various different prop firms, potentially. I can't say you could have. Can't guarantee anything, right? But that is 2 times, the requirement for most prop firms, and this is well within range of what the max drawdown is for 1 month. 69 trades across 3 different markets. Does the profitable number matter? Not really. Does the profit factor matter? Yeah, but really, when it comes to prop trading, we're looking at 2 numbers, that and that. Why? Because that's what the prop firm requires. Does the prop firm care what your profit factor is? No, they don't. They care about, can they make money off of you? That's the only thing they care about. Let's be real. So if you put a basket of, different markets together and you trade it together, and we've got a free download for you. So just go ahead and go to the ARC website, get your 3 free bar types. We've got a specialized Renko, back testable Renko bar. We've got full range bars. Make sure